morning and welcome to GrainTV.
Good afternoon and welcome to GrainTV.
Good afternoon, welcome to GrainTV.
Cody, what's your favorite number out of this morning's garage of data?
Yeah, I'd say that.
Good morning, welcome to GrainTV. It's Thursday, September 8th. We had a weaker session in the overnight for grains. Cody, what were some of the drivers overnight?
Well, we actually saw corn down about 2, beans down 8, and wheat down 4. Traders seem to be having a little bit of a wait-and-see attitude going into the Monday report. Most of that weakness was actually as a result of a stronger dollar. The European Central Bank actually lowered their economic estimates going forward. That actually puts a little bit of concern that they're not going to be hiking rates anymore. So the euro seems to drop. You know, other big things that will be coming out today are actually the fact that Obama will be speaking in front of Congress for the much anticipated jobs report, and Bernanke will also be speaking in Minnesota. 2 big heavy hitters that could really move global markets.
Right, and any sort of negative spin on global markets can have a ripple effect on our grain markets. We know that outside investors continue to adjust their portfolios, you know, moving in tandem with stocks and commodities, and so grains can be caught in the fray, if you will, as a result of changes in the outside markets.
Absolutely. You know, one of the big questions actually that I had, I was speaking with a farmer actually just yesterday, and he was hashing over what his 2011-2000 crop marketing strategies will be in the cash market.
Mm-hmm.
Is he going to take it right off the combine and sell it? What have you been seeing in the cash market, and how would you address that that question going forward?
Right. Well, each year I think it's important to evaluate what are sort of the market signals we're getting about storing grain or not storing grain. And traditionally, I like to look at basis levels because basis tells me a key indicator of what the market is driving in terms of storage returns. And so whenever we look at basis and we see exceptionally weak basis at harvest, that's usually a good indicator that it's time to store that grain on basis, that the market's going to pay you to take that grain off the market at harvest and reward you later in the marketing season. And this year we're getting some early indications that corn is going to be fetching a better basis than what we're used to at harvest. If we look at what new crop corn basis is doing for 2011, it's really been sort of escalating ever since that June 30th report, actually all the way back to March. You know, we were trading minus 55 for new crop corn basis back around planting time, and this season has just been perpetually disappointing in terms of supply numbers. And so as a result, new crop corn basis has continued to ratchet higher and higher, and it's, you know, it's marching in tandem with spot basis as well. So as we approach harvest here, we're seeing basis levels that are strongly higher than what they were in 2010. To me, that's an indication that I don't necessarily want to look for large gains in basis after harvest. It's hard for the market to basically continue those escalated gains. We know there's an upside limit to basis. And so when I see strong basis at harvest or stronger than normal at harvest, that's usually a good sign that I want to be locking in basis now and not necessarily trying to capture returns on basis improvement over the storage season.
So right now, a hedge to arrive contract may not be your most profitable or
That's right.
Opportunity.
You know, if I'm looking at opportunities, obviously I want to search around in my local markets. I want to look for the best opportunity. Here at Grain Hedge, we can help you do that with our tools. But basically what you want to do is basically try and lock in the entire flat price if you're satisfied with the futures, because I don't look for basis improvements to be exceptionally strong this year. In beans, I think it's a different animal. I think beans have the opportunity to be a mover in terms of basis this year. And this is going to be contrary to what we saw in 2010, where corn was actually the upside gainer on basis and beans was fairly weak. So I think this year the roles are reversed. I think beans are going to be weaker at harvest. I think we have a more normal sized crop. You know, I think export demand's a little weak right now, but there are talks that China, for example, is going to come down the pipe in 2011 and 12 and be a heavy buyer. Those things shape up for the story of storing beans on an improving basis over the course of the marketing season.
An interesting thing in terms of bean basis is, you know, we don't have the export sales numbers today. That's actually delayed until until Friday.
Right.
But China actually locked in some Brazil beans delivered in November, so that's kind of a slap in the face there.
Right.
I mean, do you see that as
well, I think it's
lack of
short-term
demand?
negative right now.
Yeah.
You know, obviously China going to Brazil and locking in November beans, you know, is a negative for our markets. But China's main grain buyers have said, you know, we are going to be aggressively buying beans. They are putting out numbers that are 68 to 69 million metric tons compared to USDA's numbers of 62 to 63 million metric tons. So, you know, China is giving the signal that they may be aggressively in the market later in the marketing season. So if I'm a farmer, you know, basis improvements may be in the cards for beans as we move forward.
So all in all, it looks like corn, don't look for significant basis improvements. Beans, different story. There's a lot of room for that to actually improve going forward.
That would be my guess. Yeah.
All right, fair
All
enough.
right.
Well, we're going to head to a commercial break. We'll be back and watch the markets open. Welcome back to GrainTV, and we're watching the markets open. We are down 5 cents for corn. Beans down only 2 cents. November beans right now trading at 14.18. That's above that 14.10 and 14 even support that we've been looking at. It looks like that it is getting a little bit of buying support there, but once again, we are down around those levels, those key levels, and we're going to want to pay attention as the trade continues today, because you know, if we collapse through 14, and you can really see on the chart here, you can see the support there. Those are known as wicks right here. You can see that the range we actually traded down, but then the buying pressure pushed back up. We have a couple of wicks down there. You can really see the support,
right?
And I'm hoping to see us hold that line for the trade today.
Right. And Cody, one of the things that we're looking at right now is our Fire Tip trading platform that every one of our farmers gets when they're signed up as a trading account. And not only the charts are updated in real time, but options as well. And farmers really like options because they can give them some price protection without the issues of margin calls. So Cody, maybe we could just take a look at some option strategies right now.
Yeah, sure. I mean, one thing I just want to stress is that farmers can have live quotes in their office. That's a nice thing here. You have a trading account, it actually doesn't end up costing anything if you make 4 trades a month. So you have live quotes. Nice thing, as you said, you get option quotes here, and you can see the bid and the ask for certain strike prices on a specific futures contract.
Right. And so, like, for example, if I'm looking at March corn and looking to lock in a price floor on that, you know, March puts are trading right now, and so a $7 put, for example, you know, the bid ask spread is kind of wide right now. You know, it's 35 7/8 is bid and 43 ask. But, you know, as a trader, I would look to try and put my own quotes in there, or put my own bids or offers in there to try and get some depth in that market. So,
yeah,
you know, you can basically lock in or establish a price, establish that trade, go out and go do the business of your farming and let the market come to you.
You oftentimes find that in the options market, these the spreads between the bid and the ask, they may be a little bit wider. And that's why using a limit order can actually be very beneficial. Another tool that you can utilize in FireTip is a limit order.
Right.
I like to also, when you're looking at options, take a look at open interest. How many contracts are actually out there? And you know, you mentioned a $7 put. Notice that's one of the largest open interests in terms of strike prices out there.
Right.
So,
and they're going to trade a lot. There's going to be a lot of trading around that whole number. So, you know, that's why you're going to see that volume there and that open interest.
Absolutely. And, you know, for anyone that is interested in trying to set this up on your home computer, we'd be happy to walk you through it and help answer any of those questions that you have. You know, it can look daunting with all the numbers and the columns. It's really quite simple.
Right.
It's just a matter of knowing which buttons to push.
Hey, thanks a lot for joining us. Call us anytime, 290-1196, or visit us on Twitter or Facebook or on the web at grainhedge.com. Have a great day. We'll see you Friday.